Good evening, Trey. This is Ryan with TrendLizard.com. I hope you're doing well. Times are obviously crazy. I hope you're surviving this crazy period in the market. I'm going to take a look at a few stocks for you that you sent me, or I guess one stock, two ETFs. We're going to take a look at Ark Innovation ETF, ARKK, and then TLT, the 20-year Treasury Bond ETF, and then close it with Zoom Communications. So I know I've looked at all of these before, not sure if they were for you specifically or for other people, but it's a bit of a review just with updates with what has happened largely in 2022 and what has been obviously a massive decline over that period, and that has been the case for all three of these guys. So let's start with ARKK and see what we can learn. First off, we know from its inception in 2014, basically, we've had a nice trendy, great run up into the 2021 high. At that point, things really reversed hard for Ark and has turned into a massive decline since then. Now, what we know is from the low, all-time low for Ark to the all-time high, if this pullback was just a correction of that action, it would have found a low somewhere in this yellow area. It failed to do that. It continued down and has moved substantially below that yellow Fibonacci support area to tell us that whatever it is that we're looking at to the downside is a larger degree move, obviously the biggest thing we've ever seen in the lifespan of Ark, at least to this point. So that's what's going on. Last time we took a look at this guy, we knew that it needed to get above 90 to reverse its chart higher. I think it was probably closer to 70 at that time. Obviously, it did not. It continued down and remains near the low currently. So there's no sign of a low yet. Obviously, this is a larger degree pullback. We need to figure out what's going on here and when it might become a buying opportunity. So let's go ahead and zoom in here. So this takes a look at the decline off of the 2021 high, and this is how we had labeled it last time. Now, we looked at this initial down leg off of the 2021 high, looked like a three-wave move, had this counter trend recovery, and then a big sharp breakdown. The hope was that this was an ABC decline, and we wanted to see some type of indication of a low, which would have occurred with a move above 59. That never materialized for Ark. Instead, price turned back down, has headed sideways over that period of time, and as a result, this entire choppy mess that's happened since May is clearly a counter trend move, and it puts into question the nature of this entire decline, and this is what I mean. It means we could potentially label this decline as more of a trendy move. It's hard to like the start of the move, again, because it looks like a three-wave down, but it's possible that all of this is just one big second wave recovery. We had a third wave down, and whatever's happening here is a fourth wave to the downside. Obviously, that would be concerning on a larger time frame, because if we're getting a massive five-wave decline, it won't be the only one. We would get a five-wave decline, a larger counter trend recovery, and then another five-wave decline before it's all said and done for Ark. That's a larger degree discussion, something that we don't have to worry about until a later time. For now, the focus is all this action off of May's low is a counter trend move. There's no way you can be bullish on this action. We have to think price will continue lower from here because the trend has obviously been down, and this action here has not changed that. It continues to point it lower. So let's go ahead and zoom in and take a look at that action here. This gives more detail to the counter trend nature of this move. You can see it's clearly just a choppy mess here. It's possible that a larger recovery is going to form before price heads lower. If it moves above 42.25, that's going to be the first indication that it is going to give us a larger recovery, whether it's a fourth wave or what it is, before price turns down. But a move above 47 is the end all be all, absolute confirmation that a larger recovery is coming, and that price is going to revisit August low before price turns down. But again, there's just nothing to do with this guy until we get another down leg, because this is clearly counter trend move it, and it portends another down leg, as we see from this chart here. You can look wave 1, very sharp down move, wave 3, massive, brutal decline. A fifth wave we would have to expect to be larger to the downside here. So essentially, we'd be looking for the formation of a five-wave decline for wave 5. At that point, the expectation would be for a larger recovery as this entire five-wave decline is corrected. That would point Ark up into this yellow area for now, depending on how deep this fifth wave gets, but this is kind of a general ballpark for where that could be headed. But that's after one more low or another down leg completes. whether that's after a larger counter trend recovery or directly from here. So I think if you're trading this super short term time frame, you could try to participate in a larger recovery off of May's low if we get one with those key levels that we looked at before, which are 42.25 and 47. But in all likely circumstances, you want to wait until this thing completes that larger fifth wave and then gives you some type of trendy upside movement to become a buying opportunity. Otherwise, there's just nothing you can do with a thing that's gone down for this long, this substantially, and continues to give us counter trend upside movement. So there is ARK. Let's move on now to TLT. Here's this guy. Interesting case, TLT. Incepted in 2002. Obviously, this ETF was not 20-year Treasury bonds, but the ETF that follows them. And as we've discussed in the past, basically the overall pattern is very hard to understand because it just doesn't lend itself to any overall larger pattern. What it has done is given us pretty clear 5-wave moves followed by ABC pullbacks that retrace the Fibonacci portion of that 5-wave move that preceded it. 5-wave up move, ABC pullback into the fib support. 5-wave up move, ABC pullback into that fib support. Things changed this time. We got the 5-wave up move, but price very much failed to find support in that Fibonacci support area, the yellow area seen here. Instead, it's broken down and turned into the largest pullback that we've seen since this guy was incepted about 20 years ago. So obviously, this is a larger degree move. This is something bigger to the downside. Let's go ahead and jump to this chart here. If we look at the advance off of the 2002 low all the way into the 2020 low, a Fibonacci retracement of the entire thing happens in this area here. And that's the best we can do as far as potential targets go. There's no bigger pattern that we can look at support areas. This is the biggest one that we can possibly look at on this chart, and it's already more than halfway through this thing. So obviously it's cutting through pretty quick, and that has to be a concern. Let's go ahead and zoom in. This looks at the pullback off of the 2020 high. Now, this move started in a very wild fashion. We had a spike lower, the COVID spike lower, a quick reversal up, and all this back and forth action. And as a result, to this point, we've considered it an ABC move because that's exactly what it looks like. So it looks like an ABC move for wave A. Then you have wave B. Last time we talked, we said a move below 139 would confirm a larger pullback. That's what happened, and obviously it's tanked from there. So based on this labeling, wave A, wave B, wave C, I'm not 100% certain that we can just casually call this an ABC and just be happy with it. I think something that we have to consider is the possibility that this is just mess from what happened in the COVID area. Maybe the high occurred here. Maybe that was the end of this up move here, and really we need to start accounting from this high here and consider it as a one of A, or one or A, two or B, and then you have this big sharp down leg here. That is a concern, or that has to be a consideration. I think the thing that you have to focus in on, if you're looking for a trade on this guy, is just this down leg off of the 2021 high. Looks like a 5-wave move to the downside. Looks like it's in the 5th wave of that move. If at any point it can find a low and get back above 113, that's going to be a good, solid indication that this down leg is over and something larger to the upside has begun. If it can do one better and move above 130, then we can be confident calling this entire pullback one big counter trend move, but obviously that is a distance away. That's going to take a major recovery to get there. I think we take it one step at a time, and that's basically looking for a move above 113, some trendy upside movement to support it, and then we can say, okay, this down leg is over, and a larger recovery has emerged from there, and maybe at that point, that becomes more tradable. Thought I had one more chart. I guess I don't for this guy. But yeah, that's what we're looking at there. It's down until it moves above 113. There's some hope that a low is getting closer just based on the 5-wave look of this move. But you have to have something to indicate a low to any of these down moves that we're talking about. There's no reason to hero this thing. Basically, it's just a matter of looking for anything that says maybe a low is in. If we're buying before then, in my view, we're doing it wrong because these things can pick up speed and happen fast, and it's just not something you want to get in the way of until you get at least something, some type of sustainable upside movement, some type of breach of key level just to kind of pave the path higher from there. So there is TLT. Let's move on to the last one now, ZM, Zoom Communications, one we have looked at before. another kind of cautionary tale of what's happened over the past few years. Zoom was obviously a COVID darling as everybody got pushed to home, but obviously times have changed. 2019 inception, counter-trend choppy movement, large 5-wave up, things changed at the 2020 high. Similar to TLT, if this pullback was going to be just a correction of this up leg, it would have found support in the yellow area. It did not. It continued to tank, went substantially below that, is now largely retraced the entire up move off of that that has happened since the 2020 low. So it's been a bearish run to say the least. So let's look at it in a different light here. And this is something that we discussed last time based on the size of this decline here. We have to think that we're not seeing the whole Elliott wave pattern to the upside. And the suggestion last time was that we're just seeing the third and the fourth and the fifth wave of a larger 5-wave move that we can't see. Just because the stock was incepted here doesn't mean that's the start of its Elliott wave pattern. And that would make this a larger degree move. Now, the concern, of course, with the way this is developed and the sharpness, is that we can't sit here and just casually call it a counter trend pullback. It could be trendy overall, but I think similar to TLT, we need to allow the current down leg to complete and then analyze the correction or the recovery that follows it to determine if it is a correction or maybe something more important. The way we're currently labeling it is this downside action here as wave 1 or A recovery, wave 2 or B. Then you have this sharp down leg, wave 3 or wave C, to be determined. We'll see. Let's go ahead and zoom in and look at what is most important. This looks at just that sharp down leg that we're currently in. We have it labeled as a 5-wave move that is currently in its 5th wave. Similar to TLT again, we need to see some indication that this is over. We need to see some trendy upside movement. We need to see a move above 100, something like this to just indicate that the tides have shifted and that there is a setup for a larger recovery, at least a correction of this guy, if not something more important. I'm going to do just a little bit of math here real quick. If we look at the Fibonacci retracements of just this down leg, talking up to basically 200, 270, 280, that area would be a standard Fibonacci retracement. There's no guarantee that we're going to get it. If that we're going to get a full-on Fibonacci retracement, but that would be the expectation once this down leg completes. So once we get some signs of a low, looks like a pretty respectable buying opportunity, whether it's a counter trend recovery or not. The setup is there for a much larger recovery. That's the type of thing we have to see. It looks like it could be getting close again because this could be a completing 5-wave move as we have it labeled. We just have to see it. We have to see some strength. We have to see some indication of a low, and then we can start talking about the value that's been created by this amazing decline over the past several months or so. So, Trey, I hope that's helpful. Have a wonderful weekend. Stay safe out there. We'll talk to you again very soon. Take care.